Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there, which is not much. Things are fairly quiet on this, first week in September. S&P 500 right at about 55.75 as I'm speaking. That's up about 17.5% year to date. So obviously a very strong year. A little off the highs from a couple of weeks ago, but obviously there's after the run that we've seen in the S&P 500, having a period of time in which the S&P 500 kind of consolidates around a level is actually healthy for the market. It sets that level, has kind of found a little bit of support. Meanwhile, 10-year Treasury yields right about 3.85%, and they've been around that level for about a month now as the market has kind of settled in on what the forward expectation for interest rates are going to look like. Speaking of interest rates, probably the single biggest thing that's out there in terms of news this week will be the unemployment or employment report that comes out on Friday. Hopefully we see kind of a moderation in that unemployment number. It was at 4.3% last month. Hopefully we stay right around that 4.3% number. That unemployment report will really help the Fed determine how aggressive it wants to be with its first rate cut in September. Are they just cutting 25 basis points or 1/4% and starting us off on the easing path? Or do they see something a little bit more ominous in the storm clouds or in that unemployment report? And do they feel the need to go maybe a full 50 basis points or 1/2% in that initial cut? We'll know a lot more after the unemployment report. Obviously, if we saw unemployment tick up above that 4.3% level, I think that might motivate the Fed to move a little bit faster. Meanwhile, second quarter earnings season is basically done. Net income per share or earnings per share came in up about 9.5%, right in line with expectations. Revenues growing about 5% for the S&P as a whole. Once again, right in line with expectations. So no super newsy thing there. It'll be a couple months before we get back into the next round of earnings season. And then last but not least, I would just say that we're starting to see a little bit of election rhetoric start to heat up ahead of November. Obviously, we're about 2 months out from Election Day. Everybody should be paying attention to the national race, obviously. That's where the most press gets focused, depending on where you are in the country. I hope, for your sake, you do not live in a swing state. Save yourself from some of those advertisements. But the other thing that I would like for all of you guys to focus on is the race in the Senate. Because interestingly enough Republicans have about 38 seats that are not up for re-election this year versus the Democrats that have about 28 seats that aren't up for re-election. That means that the Republicans' chances in the Senate are good to quite good, that they will have control, maintain control, or that if the Democrats somehow gain a majority in the institution, it would be a very narrow majority. And as we've seen throughout recent administrations, a Senate that's split can be a very effective brake on exactly how aggressive the policies are that we see pass through the institution. And we all know that the markets like gridlock. So just keep an eye on those Senate numbers as you think about how that election might play out in the marketplace. I think financial markets, at least in my mind, are going to be a little bit more focused there than they necessarily are on the national race. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.